Hi traders, Todd here of tradinganalysis.com. This is the free stock options video update for Tuesday, September 9th. The four major asset classes are moving right now. We've got stocks, bonds, commodities, and currencies all on the move. But specifically, I want to talk about two. I want to talk about fixed income and the currency markets. Right now, the dollar is breaking out big time. And specifically, we've seen the euro breaking down, but just today, we've really seen the yen start to break key levels, and that's having an impact on the U.S. bond market because the two are very closely correlated. So let's dive in and take a look. Behind us, we're looking at a weekly chart of the U.S. bond market, continuous contract 30-year future, as well as FXY, the Japanese yen ETF there in green. And you can see through 2009, okay, 2009 to 2013, these two have been fairly correlated. Then all of a sudden, in 2014, you started to see that bond market rally while the Japanese yen just kind of went sideways and then just recently has broke down. We think it's time for the bond market to play a little bit of catch up and move down and kind of heed the warning that this weakening yen is giving us. Remember, a weakening yen means a strengthening dollar. Okay, so that is the macro kind of intermarket theme behind us. The short-term technicals are this, down on the 4-hour. Here's your bond market overlaid with the TLT, which is your exchange traded fund we're going to use to set up the options trade. Coming from a third wave up here at the top, we can count a nice A wave down. We just went into a B wave triangle, 5 waves. We should not recapture this high from September 8th. So that's about 138 and 24/30 seconds in bonds, or about $117 in the TLT before we begin to move lower down towards about 113 to 112 in the TLT, or about 136 in that 30-year bond future. So the trade we're looking to put on is be short the 117 calls. Okay. Now remember, this is a high implied volatility market in the bond market right now. Okay, so if we go to TLT, you can see that the current IV percentile is 53%. That means that implied volatility is kind of rich, and it's priced in the top half of recent ranges. So if implied volatility is pumped up, that means option prices are pumped up, right? So if you jump into this trade and you want to be bearish, you can just buy puts, and this thing just kind of goes sideways or just drips lower very slowly, you could lose money on the trade. So when implied volatility is up towards the upper half of its range, a better idea is to want to be short premium for hopefully a volatility contraction as well as a move lower based on the wave count. So trade we're looking to do is to be short the 117 calls, which are your invalidation point for this particular wave count, and we'll do it by pairing it up with a 118 call buy to create the spread. So we're going to go over here to October's. We're going to sell vertical 117, 118 call spread, collect 30 cents for the move down. And again, we want to see I don't want to launch go to meeting. We want to see that yen continue to break down, which is going to fuel this trade. So remember, what we're going to be looking to do is in October's, we're going to do the 117, 118 vertical call spread. We're going to sell it, collect a third of width of the strikes, about 30 cents, and we want to continue to see that yen, that FXY, break down for intermarket confirmation. All right, guys, good luck. I hope that helps, and we will see you on the next video update. And remember, if this video helped you, give us a like. Go ahead and subscribe, and you'll be notified when we do videos like this just about every night of the week. We'll have a new trading idea, a little bit of education, focused in technical analysis as well as options and other fun stuff. Sometimes I bring guests on, and we have some fun with this. So I'll see you guys on the next video update. Good luck, sir.